Hello, everyone, and thank you for being at the forum today. Welcome to the Stanford TLCom Africa Pitch Competition. As you've heard throughout SABF 2021, the theme of the forum is Driving Growth and Innovation for the Next Decade. During this pitch competition, we will be hearing from entrepreneurs who are a part of this innovation, and I'm so excited for you to meet them soon. So, how will this work? Well, there are 6 finalists, and they will all pitch to a panel of judges for 5 minutes, followed by 5 minutes of Q&A with the judges. Later today, we will have an award ceremony where the first and second place winners will win a cash prize. Thank you to our sponsor, TLCom Capital, for making this pitch competition possible. Now, I'd like to announce the 6 finalists who will be pitching today. Here today, we have Africa's Pocket from Kenya, HeptaPay from Rwanda, PricePally.com from Nigeria, Swoove from Ghana, Utiva from Nigeria, and WeCare from the DRC. And you'll see as we go through the competition that these entrepreneurs are really forging the way in solutions across sectors. I would also like to introduce our judges today. We have Maurizio Caio, founder and managing partner of TLCom Capital, Fiona Mungai, managing director of Endeavor Kenya, Amal Enen, managing director for North Africa and the Levant at Global Ventures, and Tandeka Ngaba, principal and managing partner at Digital Africa Ventures. And with that, let's get started with our first pitch. I would like to welcome Valentine Njoroge, co-founder and CEO, to represent Africa's Pocket. Valentine, thank you for kicking us off, and over to you.
Good morning to those in San Francisco. Good evening to those on the continent. My name is Valentine Njoroge, and I'm the CEO of Africa's Pocket. And we are your one-stop shop to learn about, plan for, and act on your finances. And today, I want to tell you a little bit about the problem we want to solve from the perspective of our users. And really, the thing that we've come to realize is that a lot of Africans were the first generation really to build enough money or to grow our money enough to be able to invest meaningfully. And you see, from our perspective, we've been around for about 18 months, and we have users who have completely different backgrounds but tend to face the same problem. So you have people who've gone abroad to study and come back, and they earn quite a lot, like Sylvia, but they don't know where to invest. Then you have people who've moved to a city, they're supporting their siblings, they have a lot of responsibility, but they don't have any knowledge about what investment opportunities exist. So someone like Harold has been consistently investing in Forex, just one super high risk opportunity. And then you have those that have a bit of a different setup with their money. So like Njeri works at a real estate agency. Therefore, most of her income comes in as commissions, which means it's quite irregular. But the problem here is that there's no options for her to be able to invest, consistently and to plan for her and her daughter's future, because all of the options that she sees are things like education policies, insurance policies that require you to put in a certain amount every single month. So we went back to these users who've already been working with us from an education perspective, and we asked them why they're not investing. First of all, 98% of them said they can't access the opportunities. And the 3 biggest reasons that they gave us was that, 1, they don't have enough information on investments. So they don't know the difference between a mutual fund, a money market fund, and stocks. And then another group of people told us that they don't know how to evaluate the investments that they do know about. So how do I know when to buy a bond versus a stock versus, get a money market fund? And another group told us that the opportunities that they do know about and have evaluated and figured out that they're the right ones for them, they find that they're super hard to participate in because the onboarding process is really difficult, or you need a very high minimum amount to be able to access these investments. Interestingly, despite all these problems, we see that the asset management industry in Africa is quite large. In East Africa, specifically in Kenya, we invested over $1 billion last year, despite it being really difficult to figure out the right thing, and despite it being very difficult to onboard. We've looked beyond Kenya, and we've seen that across the continent, there are 52 million people who earn over $1,000 a month. And we assume that this group of people can invest $200 every single month. This gives us a potential AUM, assets under management, of $125 billion. This is the market that we want to serve with our wealth management platform. We want to make it really easy for Africans to find, evaluate, and participate in investment opportunities. Going back to the issues that I mentioned before, we already have a learning platform where we provide online courses for people to be able to figure out what to do with their money at different stages, whether it's just beginning to invest or figuring out how to make a large purchase like buying a house. And then we have digital tools that help you plan your finances. So this could be anything from spending trackers to debt management tools that help you make sure that the investments that you're making actually make sense for where you are in your life. So it makes it easier to evaluate them. And then finally, we are in the process of building an investment platform that will connect our users to investment opportunities and portfolio options that they can take advantage of to really achieve those dreams that they're going for. We already have a community of 30,000 people who trust us with their financial education, and 1,400 of those are premium users. These are people like Sylvia, who has now invested over $4,000 in just a year. Harold, who has now diversified his portfolio. He has an emergency fund. He's investing in stocks as well. And then Jerry has created an additional source of income so she can balance and regulate her income, which kind of reduces the problem that she had before. And these guys are asking us, how can we make it easier for them to make the investments, to make the right investments, and to access more opportunities? They want that one-stop shop solution. So looking at the competitive landscape, we see it in two ways. So there's tailored wealth management on one end and then self-service platforms on the other end. And then we've now divided that into two segments. One is those with a global focus. So this is mostly the US and Europe, and then those with an African focus. And we see ourselves as though Betterment and Masterclass had a baby. And so we're providing tailored wealth management with an African focus, but we're filling the gaps for our users with education. And that's what makes us stand out. We're not taking the approach of Robinhood and eToro, where they have a list of options that you can choose from. Rather, we're taking a tailored approach to that wealth management by giving people a portfolio that they can access. So far in this quarter, the first quarter of 2021, we've been able to make $45,000 in revenue, and we're on track to do $200,000 this year. Looking ahead, we hope that the funding that we're raising right now will get us to about $50 million in AUMs once we've been able to get our investment platform online and get our referral program going. There's already a team behind this, a world-class team. My background is in wealth management. I've worked in wealth management companies in the US, in Africa, and then I've gotten my MBA from Oxford. I'm also a second-time founder. And my co-founder, Moses, has experience from McKinsey and his master's from LBS. And so we are raising $1 million as a safe note. And this is really the first step in helping us become a $1 billion company. With this, we'll be able to reach 50,000 monthly users and get to that $50 million in AUMs, which is really the first step in helping us be on the right path to serving about 2 million customers within 8 years, which would allow us to become a $1 billion company. We're also looking to grow our team. And so we're looking for people who are interested in this problem, who can help us improve our product, our technology, and market to the right people. So join us as we build generational wealth in Africa.
One question, Valentine. Hi, this is Maurizio. Thank you for your presentation. I wanted to ask you about the trade-off between the fact that you are positioning as a tailor-made solution as opposed to picking among pre-defined options and the ability to scale. Usually, it is simpler for a business to scale when you can choose any color as long as it's black. So just comment a little bit on that. I like the way you articulated the magnitude of the opportunity and your progress so far and your level of ambition. I was just wondering, in terms of your business model, the trade-off between having one solution for each of the thousands customers as opposed to the ability to scale quickly.
Thank you for that question, Maurizio. So maybe to clarify, what I mean by tailor-made is that we want to be able to say, this is your goal. You want to buy a house in 5 years, and you're this, you're a certain age and you have a certain amount of money to be able to invest every month. We would then, in the background, figure out what your portfolio needs to look like for you to reach that goal in that amount of time, rather than leaving it up to you to decide whether to buy shares or bonds or money market funds. So it's taking a more wealth management focused approach rather than a stock brokerage focused approach. Because we've found that people don't want to figure out how to put their portfolio together. From the customers that we've had so far, they want you to tell them, okay, do this and you'll get this goal in this amount of time.
And just a very quick follow-up question. So when you've thought about how much money you need to go from A to B, you have factored in the fact that you need a little bit more people than you would otherwise, because every client will need a little bit of treatment, so to speak, to build a proposal for them.
Yes, so we are hoping to be able to do this digitally, because once somebody gives you their information about what their goals are and what they're trying to achieve with their finances, then in the background you can kind of run programs to help you figure out what their portfolio needs to look like. In the back end, there'll really be a few options, maybe 5 options that we'll be able to offer to customers based on a few variables. So perhaps tailor-made was the wrong phrase, but probably portfolio driven is a better phrase for what we're going for.
Thank you very much.
Thank you, Valentine. This is Fiona from Endeavor. Thank you for your pitch. 2 quick questions for you. Please walk me through your business model, so how you make money. And then secondly, talk to me about how you acquire your customers.
Yeah. Right. So we have 3 revenue streams right now. Right now we have 2 revenue streams and we're adding a 3rd one. So the first one is our online courses have a one-time fee. We charge anywhere between $50 and $250 for an online course on financial education, depending on how heavy the cost is. And then we also charge a subscription for our tools. So for example, spending tracker would cost about $2 a month. And then now we're adding the investment platform where we will charge a percentage of assets under management.
Okay.
And then you asked about acquiring customers. So far, we've acquired customers in 2 ways. One is through organizations. So we've worked with Deloitte, with BBC to go talk to their employees, get them on board. And then we've also used social media quite effectively to grow our community.
And I have one last question within our Q&A time. Can you also touch on the licenses that you will need and that you have already secured to be able to invest a diversified portfolio on behalf of your clients? And is this restricted to a certain geography or in a certain market, or you're able to build a portfolio across markets?
Yeah, so right now what we're doing is we're working with asset managers to be their sort of an independent financial advisor model at the moment, but we would be able to get a license in Kenya for an investment advisor that would allow us to create portfolios for our clients, and that can happen once we have a certain threshold in AUMs, something that we're working on. That's part of what the funding will go towards.
And with that, we are at time. Thank you so much, Valentine. It was great to hear about Africa's Pocket, and thank you to the judges for your thoughtful questions. Next up, I am excited to announce Emmanuel Chebukati, the cloud security engineer who will be representing HeptaPay. Emmanuel, take it away.
Right, so this is HeptaPay, products of Hepta Analytics. Explain what all this is about towards the end. What problem is HeptaPay solving? Well, of the $5 billion worth of Forex inflows into East Africa, micropayments cost up to as much as 15% per transaction, which is 5 times the SDG target for remittance costs. You know, we're talking about $10 here to help your cousin with some school fees, or $30 for a ticket, or payments of that nature. Additionally, these payments are inconvenient and they're quite slow. What's the solution? The solution is Hep2Pay. Hep2Pay is a simple online web platform where a customer can come, select the service that they want, enter the amount in local currency or in US dollars, enter the phone number of the recipient, and get the service required. You can additionally enter notes for the kind of payments that you want to indicate what this payment is for. What's our value proposition? Well, Hep2Pay is easier to use. You don't need necessarily need to download an app, and we support bills like electricity and water, whereas some of our competitors don't. We're also faster. We complete transactions in less than 30 seconds, and we're made for repeat transactions. These small payments for $10, $20, Hep2Pay was made for that, as opposed to a large remittance payment. We're cheaper than our major remittance competitors as well, especially for micropayments. Take a look here at our closest competitor. If you pay $10, the recipient gets 6,759 francs. For Hep2Pay, it's up to as much as 9,320. What's our moat? Well, if you ask any African, this is the fintech that they know. You walk into one of these mobile money shops, they can give you any service that you want. Hep2Pay operates on a similar model, except that we automate these transactions, as you can see here. Here's an example of a payment going through Hep2Pay. In other words, we've written this custom USSD automation software, and we use it to process transactions, which means the following. We require less investment to get up and running, and we get better uptime. We can offer basically any service that's available on USSD across the region, including electricity, water, and others, and we can scale to any African country, starting with Uganda and Tanzania. In other words, we've created an API where none exists a problem in this region, a uniquely African solution to an African problem. Our target market is the expatriates, whose wallets are not integrated with local systems, diasporans who want to pay bills home directly to the business, and tourists, once the pandemic eases up, who want to interact with local vendors and maintain the use of their debit or credit card wherever they're from. We make 6% per transaction. We also make a bit of money on the exchange rate, slightly lower than the national bank rate. And because we're agents, here's the interesting bit, we make commissions on every transaction that takes place. So Hep2Pay has 3 revenue streams. Our traction, we've got an angel investment that got us started. We also got a no objection letter from the National Bank. In other words, they were saying, this is new technology. You're basically just an agent. There's no need to regulate you further. We've participated in the FinTech Hub in Rwanda. We've gained trust of diplomats. We've got ambassadors, heads of missions, and NGOs transacting with us. Our average transaction value is around $50, and we've got a 60% customer retention rate. And basically 60% of our customers come back within 3 days. To grow, we're looking to market to expatriate communities via social media ads. We want to also spread the word to merchants about a free global POS. In other words, if you're a small-scale coffee shop, artisan, landlord, you have a free POS that you can use to receive money from your expatriate or diaspora clients. We also want to engage the diaspora about increased visibility for their transfers. We're scaling currently to Uganda and Tanzania via this similar agent model, and then continentally via the Trusted Agent Network. We are looking for an investor or strategic partner who is able to work with telcos and agents in particular, as well as somebody with a strong knowledge of marketing to premium customers. As I said, Hep2Pay is quite a premium product, given the kind of traction we've seen so far. This is the management team. We are second-time founders. Hepta Analytics was our first baby. It's a successful data analytics consulting business. This is a project that we began to solve a personal problem we were facing as expatriates in Rwanda. We are also, we have banking experience. So we have 2 bankers, former bankers on the team. We have 2 data scientists who help us in understanding the customer and building custom solutions for customer support like chatbots, 2 people in infrastructure and security, and 2 people supporting our business development efforts. That is our pitch. I look forward to answering your questions. Thank you.
Manuel, I'll go first and very quickly so that we can have as many questions as possible. You were mentioning that, of course, it's easier, faster, cheaper, and of your 3 revenue streams. One question is, when you experience the first traction of your product and of your solution, what was the place where you were finding other solutions to this place? For example, you were thinking this could also be a POS solution, right, for merchants. And we all know that these poor African merchants are visited by dozens of fintechs that show up with their ultimate solution for their POS. So I wonder, what was the point where you found easier traction, and what was the revenue stream where you found more resistance to displace existing solutions?
Thank you for that question. The point of traction was the COVID-19 pandemic. If you look at that graph, there was a bit of stealth mode, if you will. The pandemic hit, and all of a sudden, everything's gone digital. And expatriate needs to pay for food, they need to pay for water, they need to buy electricity, and they can't move around going to the banks, ATMs, etc. That's when we realized that this thing is taking off. As far as integrating with the small-scale merchants, what we've done is we've got a custom URL for them. So they don't need to do anything to integrate with HepToPay. As long as you have a mobile money account, you are automatically able to receive on HepToPay as long as you provide the phone number. The revenue stream that is most profitable for us has to be the 6%. We charge 6% card transaction fees. Our card processors take about, there's a bit of a sound. Our card processors take about half of that, and we are left with the remaining. So that's the primary one. But of course, exchange rate, we drop it a bit, we make some money there, and the commissions are just an added bonus. It's fantastic.
Thank you very much.
Hey, Emmanuel, thanks so much for sharing your story. What I'm curious to find out is how HepToPay goes about having a lower cost of sales or cost of kind of per transaction relative to the other competitors. So what are you guys kind of charging less for relative to the other competitors? In other words, how are your customers able to get more money out of transactions relative to the other competitors you mentioned?
Thank you. Fantastic question. As I said, we run with what we call M servers. We've nicknamed them M servers. So we're not integrating with the telcos. We're not going around, getting a local capacity and doing site-to-site connectivity and investing in large servers. And we know this as an authority because we do this kind of work in our consulting business. We are operating on mobile phones. That's our server. It's a $50 smartphone. You put an agent SIM card in it, and it processes transactions, which further means that we can basically scale to any country in the region, provided you give me a SIM card and put it on my smartphone and run my custom USSD automation software. So that's how we're able to bring this cost down by 5 times effectively, as we saw in that example. I hope I've answered your question.
And Emmanuel, again, I would like to understand a little bit more the regulatory framework that you'll be operating in. And you mentioned that it's no objection so far, like kind of blessing that you have from the central bank. How far does that get you, and what would be the next step?
Yeah, thank you. Great question. We, as I said, received a no objection letter because they looked at this product and said, what exactly are we regulating? You're just a regular agent. The payment initiation doesn't necessarily take place in this country. We don't see anything. Just launch it up and let's see where it goes from there. But we do have a legal consultant doing some work in the region. That report is coming out in the next few weeks, actually. The general theme as we engage other regulators in the region is the same. You're an agent, I don't see anything to regulate, but as a word of caution, proceed and get, look for licensing nonetheless, just to be safe. So that's what we're seeing, and it's fantastic news for us because, it means that we're able to scale faster than any fintech doing this thing.
Like all fintechs, ask for forgiveness later.
Wonderful. And that is time for us. Thank you so much, Manuel, for telling us about HepToPay. Really exciting to hear your story. And now up next, I'm very thrilled to announce that Luther Lewain will be introducing PricePally.com to us. Luther is the co-founder and CEO. And Luther, I will hand it over to you.
All right. Thank you very much. Can everyone hear me? My name is Luther. I'm CEO at PricePally.com. We like to call PricePally a digital food cooperative platform for African cities. So the problem we're solving is quite a critical one. In Nigeria today, an average middle-income family spends up to 60% of their monthly income on food, which means that for every dollar they get, they spend 60 cents and only have 4 cents to spend on other important things, such as transportation, housing, stuff like that. The same thing goes for lower income families who spend up to 90% of their income on food. And this statistics is backed up by the World Food Program, by the USDA, and by the National Bureau of Statistics in Nigeria. And there are several problems within the value with the food value chain in Nigeria and other African cities. But there are other problems associated with that. Even for the fact that the prices are food is expensive, the prices are very volatile. They go up and down by any measure. There's also the lack of standardization in the markets. There's also no quality assurance. You go to the market and buy stuff and get home and it's not what you need, or it's really spoiled and all of that. And all this, there's also no way you can track where your food is from or who grows it and whatnot. And typically, there's also no transparency. You have to get to the market and haggle prices, stuff like that. So all this leads to several problems, including poor nutrition. But we have at Price Valley, we've come up with a digital platform that enables people to buy food in bulk or to share bulk food items with other shoppers sourced directly from farmers and wholesalers, which enables consumers save money, enables them save time in a very busy city like Lagos, and we guarantee the quality of food that we supply. And in the case where they are not, the customer is not satisfied, you can always return for a replacement or a refund. And every food item that we sell on Price Valley is traceable, and our prices are transparent. You can go online and check out the prices and compare them to the local prices in other markets. So this is how we do it. Price Valley, cuts out several layers of middlemen, to get to the consumer directly from the farmer, which enables us pay the farmer more and also have the consumer, pay less compared to the traditional model, which has several layers of even some who are who add no value to the chain, but hike up the prices before it gets to the consumer. We started off late in 2019 and our traction has been good. We've been, we recently closed our pre-seed and we've been using that to grow as fast as possible. For the fourth quarter comparing quarter on quarter, we were 54% higher this past quarter. We work with over 300 food suppliers. We have a customer retention rate of over 70%, and we've done over $250,000 in sales, completed close to $3,000 orders. We see a very big opportunity across many cities in Africa. The first we are starting with is Lagos, which is an $18 billion market. And by the fourth quarter of this year, we'll be expanding to Abuja and Port Harcourt, which are two other cities in Nigeria, before we start extending outside of Nigeria to countries like Nairobi, Kenya, Accra, Ghana, and other cities where our model fits to solve the problem for them. We're a team of 4 founders. I'm a 3-time founder, and this is my 4th startup. I have, Musimola, who is our Chief Data Officer, and also Juma Balaka, who is our, operations person. She's very experienced in the food and grocery, space. And we also have Deepak, who is our team, our CTO, and also a co-founder. If you're in Lagos anytime, you can check out, use Price Valley to save yourself money and time. And soon as we get to Abuja and Port Harcourt, you should be able to do the same too. And when we start off to other parts of Africa. Thank you very much. I'm able to take questions now.
Thank you, Luther. Just question, and I might have missed it when you're explaining it, but are you doing the last mile delivery, or how do you get the produce from the farm all the way to the end consumer?
Yeah, so the produce comes to us from the farms to a central processing unit that we have in a market called Mile 12 in Lagos. And from there, we split everybody's order to the share that you've paid for, and it's delivered to you via our partners. We work with GoCada, we work with Uber, sometimes we work with Bolt, and other logistics companies deliver last mile to families.
Okay.
One question, Luther, from me is, you mentioned in a graph B2C and B2B revenue streams.
Yes.
Is the B2C is pretty clear? Is the B2B to retailers, informal retailers, and stuff like that?
Yeah. So our B2B is currently it's to hotels, restaurants, food.
Okay.
People who use food as an input in their business.
The other quick question is that we're investors in Twiga, so we're pretty familiar with the notion of pushing food towards closer to the end users. The impression is that it takes a long time to conquer a city and then move to the next one. So I guess this is not a question, but is an unrequested piece of advice, which is conquer Nigeria before you waste time on Ghana and Nairobi. Because it will be very, very valuable in the eyes of acquirers or stock market in the future.
Sure.
But congratulations.
Sure. Thank you very much.
And I'd love to understand a little bit more, Luther, the margins along the value chain and where you see margin expansion going forward, especially with the mix between B2C and B2B. So what is your margin on B2C versus B2B, and where would the margin expansion be coming from down the line?
Yeah, so we see more margins with our B2B, more volumes, more margins. We do about up to 25%. Well, this depends actually on the seasonality of the products that the users are buying. But ordinarily, we do between 20 to 25% of margins on our B2B, and a little lower with our B2C at around 15 to 20%. But this is based, this is affected by the seasonality of the product or the availability and stuff like that. And okay, yeah, going forward, we see more returns from our B2B. Our B2B is gradually beating what we started with our B2C. Actually, we initially started this off serving families, and businesses saw the advantage and they kept on. But we are seeing that the growth of our B2B is increasing further by the day. I hope I answered your question.
Hey, Luther, I just had a question on the graph that you showed earlier. So you showed the quarterly revenue that you'd made. Yeah. Were those numbers GMV? So the value of the products? Okay, so and then GMV. Off of that, you would take the 15 to 25% margin. Okay.
Yes.
Luther, could you quickly talk about your competitors in this market, in your market?
Yeah, well, our most viable competitors are the mom and pop stores, like people who sell this food, retailers basically, because they are closer to the consumer. They are, they're everywhere in Lagos. Lagos is not very, very organized, so you can meet up, you can get a market very close to you. And so they are our, biggest competitors, but we intend to also serve them as our volume grows and as we gain more capacity. But those are, are very, formidable competitors. But looking online, we have the likes of Supermart NG, we have the likes of Farm Quality Foods, and a couple other, online startups that are in the space.
And any just to tie onto that, with the other startups, so what makes you stand out, or why would a consumer?
Yeah, so our model is the difference, because we sell at wholesale, but we enable people buy retail from that wholesale at the wholesale price. So you could buy, 4 of us here could buy a bag of rice and split it instead of buying, a cup of rice like they sell in the market. So it saves you money compared to buying at retail. That's our biggest difference.
Right.
And with that, we're at time. Thank you so much, Luther. That was really great to hear your story about Price Pally. And next up, I'm very excited to introduce Kweku Tabiri. Kweku is calling in from Ghana. He is the CEO and co-founder of Swoove. And with that, I will hand it over to Kweku to tell you more about what Swoove is doing.
All right, I'm going to go over again. So as Cassie said, my name is Kweku, and I'm the co-founder and CEO of Swoove. And at Swoove, we're building a platform to connect small businesses to third-party logistics services. So the problem we're facing is that the cost of delivery in Africa is quite expensive. It's anywhere from 35% to 55% the cost of the product you're trying to sell, which can be prohibitive towards online sales, as you can imagine. And what we believe is the cause of the problem is that the third-party services that come up to serve these businesses operate very inefficiently. They tend to run on-demand model, and that model can be very expensive, and they lack the knowledge and the technology to adopt something else. So that's where we step in. Our solution is a three-step solution. First of all, we equip these third-party logistics services with the technology to make their operations more efficient, to automate most of their operations. And then we connect as many of them as we can into a network to self-fulfillment. And then we give access to this network to the SMEs that we work with through our software. So basically, this is how the magic happens. Customers are able to schedule deliveries ahead of time through our app, through our USSD shortcode, and through our API. We aggregate these deliveries as the demand come in into organized batches and routes. We've written some algorithms in the backend to do that as efficiently as possible with the lowest possible cost. And then we auction these delivery groups to the third-party services that we work with on a daily basis. And this gives us certain key advantages. The first of which is price. We're very uniquely and laser focused on efficiency and price points compared to speed. So that's how we differentiate ourselves on the top end. So in terms of price, we're up to 30% less than the on-demand models that other delivery companies run in Ghana. We also have our auction system, which makes automating incentives quite easy, because with these delivery companies, service quality is one of the biggest problems. So our auction system helps us automate that. Then we have an API and a USSD code in auxiliary to our mobile application, allowing us to reach many channels. So anybody with an offline device, a feature phone, can still use our services even if they don't have internet. And then our network approach is quite unique in the fact that it will allow us to expand to new cities really fast. It has low capex, and we can maintain a small team even at scale. These are some of the primary customers that we focus on. We have Jemima. Jemima has been working with us since October of 2020. She's done over 221 deliveries so far. She runs J4 Crafts on Instagram and Twitter. And what that allows us to do is, and what Sue allows us to do is, she can schedule deliveries as far as possible for the least possible price. So Sue is really perfect for her. She's our favorite. Then we have corporate clients like MTN who are adopting our API. So these are corporate clients that need scalable and affordable logistics solutions and do not want to invest millions in setting up their own infrastructure like Jumia. So people like MTN are long-term targets. We're currently running a pilot with MTN in Ghana, and we're hoping to pilot their MTN mobile money marketplace this year. Our traction so far has been quite interesting. We went to market first in August of last year. We're running an on-demand referral model, and then we grew at an average rate of 10% per month, which is okay, I guess. And then in November, we realized that the on-demand referral model had a lot of flaws. So we decided to pivot. We spoke to some customers, we experimented with new models, and then we moved into our current focus, which is scheduled and fulfillment orders, order fulfillment. So after that, we did a transition over December and January, and then we realized gains from our hard work. So over the course of February to April, we grew at an average rate of 20% per month compared to the 10% we were doing the previous month, which gave us validation that we're headed towards PMF, or we had already achieved it. Retention also increased quite a amount, from 50% to 40%. Our revenue model is very simple. So on an average of a $4 delivery, we'd pay $3 to our delivery services on a per km basis. This is including last mile, long haul, and first mile. And then we retain about $1 out of that. So it's about 25%. We believe that our break-even point is going to be in 9 months at our current burn rate. The market opportunity for logistics is quite big. In Ghana, at our current growth rate of 20%, we expect to reach 200,000 businesses in 5 years. And at an average price of $4 per delivery and 1 delivery every single week, so 54 deliveries per year, we expect the market opportunity to be $43 million for Ghana alone. And obviously, the e-commerce market for the e-commerce logistics market for Africa is much larger at $21 billion. Our growth strategy is similar to what we're currently doing. A majority of our current traffic is through referrals. So friends and family, and shockingly, sometimes you have customers who are referring Sooth to vendors. The vendors may have their own preferred delivery service, but then a customer would refer Sooth to the merchant, because Sooth can actually give you a better price when you wait a little longer. So that's our current growth model, and we intend to keep that up, referrals, over the next few years. Our secondary growth strategy is through integrations. Similar to what we're doing with MTN, we strongly believe that the future of the e-commerce space is with large businesses like that. So we have a strong focus on our API integrations on a direct B2B sales level. This is the core team. I myself am the CEO. We have Kingsley in terms of operations. We have Gloria and Kevin who are in charge of marketing and sales. And we have Robert and Sam who are in charge of technology, basically. The strongest point for our team is that we have a very strong technical foundation. Myself, Robert, and Sam alone have at least 10 years in software development. implement. We've been doing this since we're kids. So for a problem that requires such complex implementation, we believe we are uniquely poised to be able to implement the solution. We're looking for 200,000 in pre-seed funding. We've not raised any money yet to expand our business from the country capital of Accra to the other 9 regional capitals. And then we're hoping to support international deliveries through our partner DHL, and then increase our revenue from $3,000 per month to $15,000 per month, which is 5,000 deliveries per month. We also need to hire certain key roles to make this transition to a much larger scale much easier. So at the very least, we need a supply chain manager, we need some customer service staff, and we need 2 new full stack engineers. So far, we've put in about $20,000 from the founders ourselves through freelancing on software contracts, since that's our strong suit. So if there's any investor out there who wants to be the first investor in a young, high growth business that has the potential to solve a really, really big problem, please contact me. Thank you very much.
Kwaku, thank you. A question from me about pricing. You mentioned $4 with a $1 target margin, so to speak. And I was wondering, A, whether the $4 is an average or whether it's actually a fixed price, or it's an average. So what do you price? Is as a percentage of the value of what you're delivering, or what is it? The first question. The second one is the margin is, I guess the real question is, why do you care about margins so early in the path of the company versus growth?
Our margins right now is sort of like an average price point. So in terms of our pricing, it's based on where your package is going and the weight of the package. So it has nothing to do with the value of the product, unless you apply insurance. So we're trying to work with some insurance providers to add that kind of value add, so they can apply insurance to it. That would reflect on the value of the product. In terms of why I care so much about margins, obviously this business is more of a scale business. And so far we've been working on our own. So burning so much money per month has been a bit of a big deal for us. So I tend to care to try and minimize the margins at the moment as little as I can, so that we don't go out of business.
Kwaku, question from me is, are you invested, do you own your own assets, or do you use third-party assets?
I was hoping that would translate. It seems like I wasn't too clear on that. We work with third parties. So small delivery companies that own 2 or 3 bikes, we don't actually own any of our assets. We don't own a single delivery bike. So we work with those third parties, and obviously that introduces some difficulty in terms of quality control. That's why our KPI and our auction system comes in. So it's more competitive, and people are compelled to work like at a higher performance level.
Hey, Kwaku, just to follow on that question. So I'm curious to find out, because you kind of have an auction system going on your platform. So I guess my first question is just around, like, how do you vet that the transporters have the right kind of equipment? Because I know with different types of goods, you need certain specifications to move goods across from one place to the other. And then second of all, how do you balance kind of down pricing? Because obviously the more people push the prices down, the lower your margins are as a business. So how do you go about kind of balancing that?
So with the first one, I can say our COO is doing an extremely good job on that. So Kingsley, at the moment, literally goes to each of the delivery companies to vet them. So you sign up on our platform, he literally come to you and he go through all of our quality standards. What kinds of bikes do you have? Have you registered your bikes? The delivery companies register every single rider they have on their platform, insurance information, home information, as much as we possibly can. So he does it on a manual level. We will automate that over time so that the system can actually check all of these things automatically. But at the moment, to ensure quality, we do that manually. And sorry, can you come with the second question again?
The second question was just around, what are your guys' thoughts on pricing? So if you have a lowest price takes all model, it automatically drives your margins down as smooth.
Yes. So it's always a balance game between the cost and the profit. And for us, the way we make money actually is by being as efficient as possible, which means the rider doesn't pick up one package, he picks up multiple packages. So you pick up one package and another. Even though the customers are paying per delivery, we pay per KM. So that's actually where our margins are hidden, right? So it's always a balancing game for our technology to route as many deliveries together as possible. And the more deliveries we have in a small area, the more dense it is and the more profit margin we can get, right? So that's sort of like how we balance profit. So sometimes you make a loss, sometimes you make a profit. But for the customers, the price point is not based on that. So the price points are very static, based on distance and based on what they expect. because they're all running businesses and they need their customers to be able to predict their price point. If you keep changing it, they can't have that conversation with the customer.
All right. Everyone, it looks like we're at time. And we are now going to be moving on. Thank you, Kweku, very much for that pitch. We're now going to be moving on to hear from Tayo Ogumola, who's the CEO of Utiva. Tayo will be calling in. Utiva is in Nigeria. And so Tayo, welcome. And we're excited to see your pitch today.
Okay, hi guys. My name is Tayo. I am a technology education entrepreneur and the chief executive of Utiva. I have been in the education industry as a product manager for 6 years. And as an entrepreneur, I've been around. So in 2017, I reflected on my personal journey, how I was unemployed at the very early stage of my life. And it was very difficult for me to find a skill training in Nigeria. I decided to move back in 2017 from the US to be a part of the change. I wanted to solve this wicked problem of unemployment. This is one of the things I want you to think about. Last year, 3.3 million entry-level jobs were unfilled due to skill mismatch. And then Africa has an unemployment rate of 34%. In fact, 650 million Africans need to be upskilled between now and 2030. And to solve this major problem, we have to focus on one major critical element of the problem chain, which is access. Learning a technology skill in this part of the world is a very big challenge because we depend so much on the internet. The cost of internet is almost 4 times more in Africa compared to other countries. So my team launched a new product that is called the Nucleus. The Nucleus is an encrypted device. It helps you to have access to all your learning at once without ever relying on the internet. With about 40 different well-structured, pre-installed learning content, so that with less reliance on the internet, Africans can now learn technology skill training remotely. 3 things I want you to think about. Number 1 is that the device is encrypted with almost 4 layers of security. The training contents are structured in folders, and each folder has a unique passkey. The first version of the device has about 300 gig in terms of space. So let's talk about how this really works. Users pay for the device on our platform, and today users can pay for the device on WhatsApp, and they get it delivered to them within 24 hours. When you are ready, you run a 3-minute installation on your phone or your laptop, and then you start to learn because all the content becomes accessible to you. Within 1 year of our existence, we built almost 7 different digital learning programs, from data to cybersecurity to cloud computing to artificial intelligence to digital marketing. We established a market presence in almost 15 different cities. We trained about 15,000 young persons. We got a partnership with a major government in Nigeria to scale our learning program across 36 different states in Nigeria. Today, we have a faculty that is as large as 200 persons, professionals from different technology companies that are co-creating the learning content with us. Today, with just $80, a young person from any location can get the device delivered within 24 hours. We are unique because the offline model is not just our competitive advantage. Every content is also in the cloud. So if you do not need the device, the Nucleus, you can also access learning via our cloud-based solution. Our team is a team of about 29 persons today, led by 4 major persons. Myself, I have a master's in business strategy from the UK. My other colleague, who is the chief operating officer, had worked in technology for almost 5 years. Our director of sales has about 4 years experience driving B2C. And then our director of academy, was a former, faculty at the university. Last year, we did a revenue of almost $200,000. We are on track this year to close the year with almost $500,000. By the end of 2022, we want to reach almost 50,000 persons, and that is the goal for us. Our goal is to make this learning device accessible to everybody on the continent, regardless of their location. One of the things I have learned is that Lagos is not Nigeria, and Nigeria is not Africa. We want this device to be accessible to young people regardless of their location and socioeconomic background. Thank you. My name again is Tayo.
Tayo, thanks a lot. A very quick one. What is your pricing model? So somebody says, I like what you're selling. I want to buy it. How does it work?
So pretty much the device sells for $80 US today. And then what happens is that you have access to 2 different learning courses that you have to choose upfront. Typically, someone will choose like a data science program and then get the device. But it is learn as you pay, so you can pay another $10 US, to get access to another program, let's say design. But with our current partnership with a major bank in Nigeria, we are also offering our learners the opportunity to pay at installments, because the bank offsets the payments upfront. And that's the model that we have deployed currently.
Hey, Tayo, thanks for sharing that pitch. Just off the back of Maurizio's question, on the hardware piece, what are the margins that you guys are making on just kind of building that hardware? And then second to that, what's the payback period? So how long does it take you to kind of make back the cost of the hardware?
Yeah, thank you. There are 3 major critical costs for us. Is the cost of content creation. What we have done over time is to pay our faculty upfront for the content creation. So the contractual agreement is to pay you to create the content upfront. The device is the second cost, and the third one is the cost of delivery. What we have done is a 60% margin today, and we are believing that we can drive that margin higher if we seal up a major partnership that helps us to build or to create more content and then get more devices delivered into Nigeria, from the beginning. The second thing that we are doing is with our partnership with the bank today, it takes the bank pays for the device upfront, and then the user pays, at installments for 12 months. But the bank pays us upfront for the device. And that's because we have a major partnership with the government in Nigeria through the National Youth Service Corps that gives us access to a very large market of every recent graduate in Nigeria.
And Tayo, can we touch again on the competitive landscape? So what is the barrier for, any one of your customers just seeking this from an international player? And what would happen? How are international players also acquiring customers that are part of your target audience?
Yeah, that's interesting. We actually launched this program, which is the nucleus device, at the beginning of the COVID situation, in 2020. Because we understood and we realized that about 85% of learners drop off, learning programs. And that's because of access to the internet. So you typically see a young person pay for a course on a Udemy, but find it difficult to complete the course. Because if you want to learn an average program, let's say a data science program, you need to download the data sets and then be available to stream the videos. So that cost runs into like 5 times the cost of the learning program itself. So what we have done is to make that entire learning, program available to you on the device. But our competitors are acquiring customers the traditional way, which is, marketing on all major social media platforms like YouTube and LinkedIn, which is also what we are also doing. But the advantage for us is the channel to reaching the customers. With a major partnership with the universities today, with a major partnership with the federal government today in Nigeria, we are able to reach, almost every recent graduate that goes through the 1-year mandatory program. And that gives us a competitive advantage in terms of reaching, customers, faster and reaching them at the time that they really need to access this learning program. And that's the big value for us.
If I don't have your device, can I access your content on, say, my computer or my phone?
Absolutely. Yes, absolutely. So the caveat or the flip side of the competitive advantage for us is that the content are available on our cloud-based platform, which is our learning management system. So if you have good access to internet, you have access to the entire learning program, and then that is also subsidized. The alternative is to get the device to also, complete your learning program.
And then just last question. So talk to me about scale. What do you see like in 3 years? How big could this business become? What's the addressable market that you're looking at?
Mm-hmm. Yeah, absolutely. So in terms of scale for us, the goal is to go beyond the English-speaking countries on the continent and make our learning content also accessible to the Francophone countries. So we are literally targeting the next 5 years to reach all the countries on the continent. That's about 45 different countries. The second piece of our work is we're now beginning to see Africans in diaspora, finding it easy to also learn on our platform. So our cloud-based learning solution is also available to your Black parents that are just migrating out of the continent because they connect with the reality of the kind of learning programs that we deliver. So in terms of the scale, the vision is to make our training program available to the 650 million, African markets, and then, get out of the continent to also Africans that are in diaspora.
Thank you, Tayo. It's inspiring to hear your vision for Utiva, and thank you, judges, for your comments. Now, last but certainly not least, I am bringing up Bryce Kitio, who's the founder and CEO of WeCare from the DRC. So Bryce, you are the final pitch of today, and I'm thrilled to hand it over to you.
Thank you. Hello, everyone. I am Bryce Kitio, founder and CEO of WeCare. We are empowering people in Africa to invest in their health and improve access to healthcare. Access to healthcare is one of the biggest challenges for people in Africa. And to illustrate my point, let me tell you the story of my brother, Guy, who lives in Douala in Cameroon. 2 years ago, his wife called me. Bryce, your brother is sick at home since 2 weeks, and last night it was very complicated. I asked her why he's at home. She responded, we do not have money to go to hospital. Like 800 million people in Africa, my brother is not able to save nor afford an insurance policy to be able to have access to healthcare when he needs. The consequence is that 38% of people in Africa are delaying or postponing healthcare due to costs, like my brother. And for those who are able to go to hospital, more than 100 million people are experiencing catastrophic health spending, meaning that healthcare is pushing them more into poverty. I obviously send the money to my brother to go to hospital, like certainly many people who are attending the conference today. Each year, more than $9 billion is sent in Africa for healthcare. But the process of sending money for healthcare is not adapted to the emergency of healthcare situation. There is lack of traceability on the use of the money on the continent, and there is really no impact on this huge amount of money on the health system in Africa. To help people like my brother to build enough saving to be able to have access to healthcare when they need, and also improve traceability and facilitate the transfer of money for healthcare, we are building WeCare. The first element of WeCare is saving. Saving is something that is complicated everywhere, and particularly for people like my brother. So instead of asking him to save, we partner with local retailer and build loyalty program based on cashback, so that when he come and buy something, he receives a cashback that is stored in a WeCare wallet and can be used only for health. When member of the family or friend want to send money for health, they can use WeCare, and they are confident that the money will be used for healthcare. And next time when my brother will need to go to hospital, he can go to WeCare's partners hospital, and he will enjoy additional benefit in terms of price discount. This is how the product looks like. The first time when you enter on WeCare, you need to set up your personalized goal. You want to save because you want to protect your family. You want to save because you have diabetes, hypertension, and you need to have regularly money in your pocket to have your medication or your consultation. And when you have set your goal, our role at WeCare is to empower you to be able to achieve that goal. We also offer to you on the platform access to our health services, our healthcare partners, and also offer to you access to a potential retailer where you can go and save money when you are spending, and save for health when you are spending your money. And you have also on WeCare your health wallet where you can pay and transfer money for health. On the entire system, we have put a lot of gamification element to make all the experience of health saving enjoyable for our users. We make money in 4 revenue streams. Commission from partner, transaction fees, interest in income, and foreign exchange fees. And the most important revenue stream for us is commission from partners. We are currently testing the model in Goma in Republic Democratic of Congo. We have partnership with 2 gas stations, 2 pharmacies, 3 hospitals. We are observing 20% growth in terms of monthly growth in terms of user, 50% monthly growth in terms of total value processed by the system. And more importantly, our users are able to receive already more than $6 in terms of cashback per month, our active user. as healthcare professional, I was very pleased to see that the first transaction on WeCare was in the pharmacy was done after 3 weeks, and the first transaction in hospital was done after 2 months. Our user will love what we are doing for them. You need to keep in mind that for all these people, for the first time in their life, they are able to enter a pharmacy and buy medication without spending their personal money, or to go to hospital and have a big discount, like the case of the first baby who was born on WeCare, with more than 50% of the cost of the delivery covered by health saving through WeCare. Our partner are also very happy about what we are doing with them. We have a strong team in place working on this. Bienvenue, who is engineer, leading the development of all the technology in-house. Vanessa is leading our marketing activity, and pharmacists and health economists with extensive experience in healthcare business. We are joined by a talented group of advisors who are helping us to design and build a scalable business. We believe that WeCare can be profitable in the 30 years of experience and empower more than 1 million people in Africa to be able to have access to healthcare when they need. Currently, we are fundraising. We are looking for $500K US, mainly to build a world-class tech and data science team, and also achieve in the next 12 months 15,000 users. We are also looking for intro in telco and FMCG if someone has a possibility to do intro for us. And if you like what you heard, please do get in touch with us at the end of the conference. I am Briskitio, we are WeCare, and we are building the future of access to healthcare in Africa. Thank you.
Bryce, thanks a lot. One question is about your very practical first steps. If you raise the money, what is the way in which you try to expand the network of hospitals and pharmacies where you can spend the wallet, and how do you want to expand the sources of cash back? So is it done on an urban basis? Is it done on a network of hospital base? What is the criteria that you're using to expand the users of cash and the sources of cash, so to speak?
Yeah, the criteria for the hospital is we are mainly working with private hospital. It is much more easier for us to negotiate with them, so we are mainly working with private hospital in a city. So and it's quite easy for us now to have in Goma we have several hospitals who are in our waiting list already. That is the first point, and the value proposition for them is quite clear. And for the other side, in terms of the cashback, really to be able to scale this in terms of quickly, we need to partner with big organizations like FMCGs, or like what we are testing now with gas station, working with gas station who has a lot of gas station agency in Africa.
Thank you.
So our main focus will be to try to have a partnership with one group like Total, for instance, to give you one example.
Thank you.
Hi, Bryce. Thanks so much for sharing your pitch. So my question is just more of a clarification question. I'm trying to understand the kind of flow of funds from a remittance payment coming through to someone who's regionally in the area, to them spending money, to them earning rewards. So can you maybe just talk me through what the user journey would be from money coming in outside of the region, then to actually translating into a transaction?
Yeah. So when someone there is two levels of on the solution. The first level is when someone is in, like my brother in Cameroon. So when he go and buy stuff, he is earning cashback that is stored on WeCare wallet. So when other member of the family want to send money, that money arrive on WeCare wallet. So that money arrive on WeCare. So we have an account where we are managing that money, and we highlight to the person that you have received 200 for your, and that 200 can only be used for healthcare. So you can go in our partners healthcare and spend the money there. I don't know if you answered your question in terms of the flow of the money.
Yes, it did. Thanks. And then maybe if there's no other question. So when you mentioned that WeCare takes 20% of the hospital bill, So do you have specific agreements in place with the partner hospitals or clinics, the private network that you work with for that 20%? And just, I'm curious to find out how you've gone about negotiating kind of what seems like a high margin for your business.
Yeah. Now, yes, we have a partnership with hospital, and the good news is that we have a partnership with one good and big hospital, and almost other hospitals are just following the same same contract that we have with this big hospital in Goma. And when we discuss with other healthcare provider in Cameroon, they say to us that the potential discount that they can offer with this kind of solution is between 20 to 40%. Why? The first and main reason is the fact that they say to us that when they are seeing people with insurance, the fact that we are paying directly because the money is already there, so we are paying directly, it's something that is very important for them, because with insurance, they have something like 6 to 9 months, they have to wait 6 to 9 months to be paid. So that is why they accept this level of margin. And the second point that why they are giving that discount to us is that, yes, sometimes when you arrive with a very, you are in an emergency situation, they treat you, and at the end they discover that you are not able to pay. So they have some patients that they are not able to pay. So our role as WeCare is to empower people, so take people when they are not yet sick and empower them to have enough money so that when they arrive in hospital, they already have the money.
And is this service also expandable into pharmaceuticals? Or are you also negotiating and providing like some sort of pharmacy benefit management solution, or it's exclusively with hospitals, clinics, labs, or on the diagnostics front?
We have partnership with pharmacy, so we are now working with 2 pharmacies in Goma. And in terms of pharmacy, yes, it is what we are doing with them is mainly the negotiation at the pharmacy. We only have the transaction fees in terms of revenue stream, and what we are doing is that we are helping people to have access to product at the pharmacy.
Great.
Thank you so much, Bryce, and to the judges. We are at time. Valentine, Emmanuel, Luther, Kweku, Tayo, and Bryce, congratulations to all of you for your fantastic pitches. I'm inspired by the work you are doing, and I'm looking forward to seeing you achieve your upcoming milestones as you continue to grow your companies. Thank you to the judges for your questions and for facilitating interesting discussions with the finalists so we could all learn more.
Time to introduce the experienced, dynamic judges for the pitch competition. First, we have Maurizio Caio, founder and managing partner of TLCom Capital. Hello, Maurizio. What was the highlights for you from hearing the pitches today, and what were you most excited about?
I think it was the magnitude of the opportunities that they were all targeting. That's very encouraging, because these are all entrepreneurs that recognize that this is not about the next music download app. This is about putting technology at work to solve the big problems of Africa. And great job for the students that have selected the finalists. They're all really, if they work, if their business work, they're all going to be very big. So excellent.
Fantastic. Thank you so much, Maurizio. Also on the panel of judges is Fiona Mungai, Kenyan Managing Director of Endeavor. Thank you for joining us today, Fiona. What feedback do you have for our founders and their companies?
Thank you so much. I think just to echo what Maurizio said is the ambition. I really like that of what they're trying to tackle. And my advice to them is they have great ideas. It's all on the execution. And so just ensure that they surround themselves with the right teams and seek as much advice as possible. And surround themselves with other entrepreneurs and with other mentors and advisors who can enable them to scale and get to the next level of growth. So overall, very impressive entrepreneurs and businesses that we've seen tonight. So and great pitches as well. So thanks to the teams who've prepared these entrepreneurs.
Absolutely. Thank you so much, Fiona. Amal Ainin is another amazing judge on the panel today. Amal is the Managing Director of Global Ventures for Africa and Levant. Thank you so much for joining us today. I'm sure the founders would appreciate your invaluable feedback. What are some of the things you'd like to point out to them, or would you think would be helpful for them going forward with their ventures?
It's always really exciting to see people early on in the journey. And I think, again, credit to the organizers for the amazing selection and the founders that we've met today, solving for really much needed problems in the continent, and with a diversity from across financial wellness, edtech, healthcare, really high priority sectors in our region. I think one of the things that really stood out is how much they can learn from looking at similar or others who have tried to tackle these problems in other countries. There's a lot to be learned from across the continent, whether it's from North Africa, Sub-Saharan Africa, and the Middle East region as well, because a lot of these problems are recurring, and we have a lot of similarities across our markets, whether it's on the financial regulatory front or healthcare provision, how uninsured the market is in Africa. So I think there's a lot to learn from across countries and across markets, and I would really encourage the team to talk to the others and be very collaborative, because earlier on in the journey you can really see the lessons learned from others and pay less for your mistakes. We all make mistakes, but we can actually control the cost of those mistakes.
Fantastic feedback there, Amal. Thank you so much. Finally, we have Tandega Kaba, Principal and Managing Partner of Digital Africa Ventures. Thank you so much for joining us today, Tandega. What key feedback would you give the founders on making their pitches attractive to investors and VCs like yourself?
Thanks so much, Fola. And just to reiterate the feedback that's already been given, I think the pitches were really good. They were concise. They kind of touched on all the key points that I think most funders would look for in a presentation. I think perhaps maybe what could have come out was just the areas where founders need help and assistance. So it was a very good reflection of the understanding of the problems that they were solving and the solution, but just to kind of recognize that we do form part of a community of people who are all here to help each other. So I know there'll be room for teams to reach out afterwards, but just to know that imperfect is perfect. So you don't always have to have it right today, but that there's people in the ecosystem who are here to help.
Thank you so much, Tandega, and thank you to all of our esteemed judges. Now is the time everyone has been waiting for. Time to hear the winners of the pitch competition. Every single startup that pitched here today was incredible, as you all witnessed, and they're doing fantastic work disrupting their niche. All the founders should be beyond proud of their tremendous accomplishments. Now, the runner-up for the 2021 Stanford Africa Business Forum pitch competition, sponsored by TLCom, is, drumroll, We Care, pitch given by founder and CEO Bryce Castillo. Congratulations, We Care. Let's bring up Bryce from We Care. Congratulations, Bryce. Tell us how you're feeling.
Thank you.
You and We Care.
Sorry, I have not heard the question.
Welcome, and congratulations. Tell us how you're feeling and what's next for you and We Care.
Yeah, I'm feeling, yes, thank you. Thank you so much for the judges. Thank you for the team, for Stanford. Really, give you the story when we saw that we were in the finalists, we were really happy because for Stanford, the place and all the play and what is about innovation and all this kind of stuff. What we are doing, the next step for We Care, is really now we are really working to improve the number of users who are using the platform on the ground. So that's really what we are doing now. We are spending a lot of time with them to really understand that the platform is adapted to their need and this kind of stuff. And in terms of scalability, Mauricio asked the question during the pitch. This is something that is very important for us because we understood that to scale this business, we need to have partnership with some supra-regional players like FMCG and BP. So we will work on that as well.
Thank you so much, Bryce. Forging partnerships, focusing on product, and meeting customer needs. And thank you so much to all of our judges again. Now it's time to announce the winner of the 2021 Stanford Africa Business Forum TLCom Pitch Competition. And our winner for today is Price Pally. Congratulations, Price Pally. Let's bring up Price Pally co-founder, Luther Lawoye.
I hope you can hear me.
Oh, yes, I can hear you. Congratulations to you, Luther, and the Price Pally
Thank you
team.
very much.
Tell us
Thank you
how
very
you're
much.
feeling and what's up next for you and the company.
Yeah, well, I feel very encouraged. You know, it's always like this is like a validation of what we're doing. So it's always encouraging to have, you know, wins like this. And it's for us going forward, we're just trying to grow as much as possible. You know, scale for us within Nigeria isn't just to get customers, is to deepen our supply, to deepen the operations to solve this problem. It's really a very critical problem that needs to be solved, no matter the way you look at it, because food shouldn't be as expensive as it is. The food system is really messed up, and it's a big issue to solve. But this is encouraging us to push further. My team members are ecstatic because I just mentioned to them that we might have won, and everybody is happy for this. So thank you very much. We really appreciate it, Stanford, and everybody who was involved with this. And we hope that a year from now we would have validated what you've done for us today. Thank you very much.
Thank you so much, Luther. Congratulations once again, and congratulations to all the founders who participated in the pitch competition this year. Take a moment and take the moment in, absorb your accomplishments, and be mindful.